Welcome back to our Business Partner tutorial series. In this tutorial we'll be looking at setting up and managing labor rates. From the dashboard we'll go to Cabinet Setup and Labor Rates. Here you see the list, and based on the length of this list being the shortest list we've seen, this database has less items in it than any other database, 23. This should be the shortest video that I do, but it probably will not be. There's a lot to cover here. There's a lot to explain. And this is the list view we're used to seeing, and there's not a lot of value in this particular database in going to a particular item, because in the list view you can really see all the things that are here. You can see them here, and we've made these prices editable in the list view. And that's the only thing that you need to change. And now you can edit and change the description here, but you typically would not. That's a one-time deal most of the time. So looking at this database, we need to take a little time and investigate how it works and why we do what we do and how we do it and how these apply. So let's focus in on one item. Here we've got our shop labor, and a base cabinet is a very common item. So let's focus on this one item and try to understand how this works. So you see here that we have a note, and if you have, if you're looking at your internal note of Business Partner, this note field is fairly new, so you wouldn't have this note in here. But you can certainly follow along and add these to your copy if you'd like to. But this note says, based on loaded labor rate of $46.93 or 78 cents per minute, and a base cabinet taking 45 minutes to produce. So that's what this $35.10 number represents. That's 3/4 of an hour, or 45 minutes at 78 cents per minute. So let's talk a little bit about how we come up with these numbers and then how they apply. There's big discussion from time to time on the differences between margin and markup, and we need to talk about that so that we make sure we're using the Business Partner like we should. So let's switch over to a PowerPoint presentation and talk about markups and margins and what the difference is. The rate you enter as labor rates in Business Partner should be your loaded labor rate. A loaded labor rate consists of things like payroll, bonuses, payroll taxes, health insurance, retirement, workers' comp, personal time off or paid time off, training, supervisory costs, uniforms, vehicles, tools. Anything that is considered compensation to your employee or a benefit to your employee needs to be part of this number that makes up this loaded labor rate. For example, you pay your employee $18 per hour. To calculate that, and this cumulative number, so again that's plural, employees, $18 per hour, total pay rate of all your employees divided by the number of employees. But when you load your labor rate with the burdens we listed, let's say you come up with a loaded cost per hour of $28.80. That's the number we want to use here in the Business Partner, a loaded labor cost. Now for clarity's sake, let's talk about the difference in the markup and the margin. What we call profit is an expression of margin. That's why you commonly hear it referred to as a profit margin, and there's two forms of that, a gross profit margin and a net profit margin. So let's start with some definitions. Margin is sales minus the cost of goods sold. For example, if you sell a product for $1,000 and it cost you $700 to make it, your margin would be $300. If you state the same thing in percentages, the margin is 30%. So that's expressed like this: $300 divided by 1,000 equals 0.3 or 30%. Markup is the amount you increase the cost by to determine your selling price. For example, a $300 markup added to your $700 cost yields a $1,000 selling price. If you state the same thing in percentages, the markup percentage is 42.86%. That calculation looks like this: 300 divided by 700 equals 0.4286 or 42.86%. Hopefully that's making some sense. There's a big distinction between that. The main point I want to make is that if you mark your costs up 25%, you need to understand that you will not make a 25% margin or profit. In reality, you will make a 20% profit margin if you mark your costs up by 25%. Maybe this list of the differences between the most common margins and markup percentages required to get them would be useful. To get a 10% margin, your markup percentage would need to be 11.1%. To get a 20% margin, your markup percentage would need to be 25%, and so on and so on. And you notice how the difference between the two becomes very different as you get higher up in the margin. So to get a 50% margin, your markup percentage would need to be 100%. If you wanted to calculate the markup required to achieve a specific margin, the calculation is desired margin divided by cost. Most of us don't think in terms of the desired dollar amount of margin we want, though. We think in terms of desired margin percentages. So a more useful calculation is to use a reciprocal. The reciprocal is used in the business partner in only one place, and that is if you're providing a discount for someone for early payment, we use a reciprocal to calculate that because it raises the price, the appropriate amount, so that when they take that discount, you still get the amount of money that you originally wanted. So using our example labor cost of $28.80, and assuming you wanted to make a 30% margin on that $28.80 in labor cost, we could use the reciprocal of 30, which is 70. 100 minus 30 equals 70. That's where we get the reciprocal. The reciprocal is the balance, the difference of taking 100 and whatever you want to earn, the difference of that number is what you're looking to use as your reciprocal. So the calculation is $28.80 divided by 0.70. So that looks like this. $28.80 divided by 0.70 equals 41.14, and that would express out as $41.14. So our desired margin expressed in dollars and cents looks like this. 41.14 minus 28.80 equals $12.34. $12.34 is the markup. If we use the desired margin divided by cost calculation, it looks like this. 12.34 divided by 28.80 equals 0.4285 or 42.85%. To get a 30% margin, we would need to use a 42.85% markup, which would look like this. 28.80 multiplied by 1.4285 equals 41.14. So the 1.4285 represents a 42.85% markup. Not wanting to presume anything, the 1 is to give us that beginning number. If we had $28.40 in labor cost and we wanted to mark it up by 42.85%, we use the 1 before the decimal point to give us our original number. 1 times 2880 is 2880. So we don't have to do the math after the fact. So 2880 times 1 is 2880, and the rest of that being the after the decimal point 42.8 or 4285 being 42.85% gives us the marked up cost in a single calculation rather than having to do 28.80 times 42.85% and then add that number to it to get the $41.14. But this math here, 2880 times 1.4285 equals $41.14, becomes our loaded labor rate. So to earn a 30% margin on our $28.80 labor cost, we would need to mark up our labor cost by 43%, rounding up there obviously. Now all of these numbers are just made up numbers. These are not numbers that are meant to provide any value to you. The math is what I wanted you to see, and I think that that pretty much covers the math in this and this particular tutorial. So thanks for watching another tutorial, and the next thing we're going to start working on and looking at is the default setup. Each of the defaults, whether that be terms and materials, several defaults, and we're going to go through those next.